Okay, guys. Hi. Right. So this is on the the environment, and what our focus is on is environmental management accounting, EMA. The issue really here, I'll say it here early so that as I go through all this, so you pick it up straight away. I'm interested here. What we're interested here is in the measurement, in putting processes in place to ensure that we're able to capture those, if you like, expenses and costs that ordinarily wouldn't be caught and would be lost and not allocated efficiently to the product. So there's an ethical issue here as well as a cost issue, because we might not be costing a product efficiently because we're not able to trap or capture the costs. So EMA is very much about putting processes in place, and if we have processes in place, we can then do everything we do with management accounting: control, monitor, if you like, evaluate, analyze, blah blah blah. So the key point here really about EMA is, and there's two key methods of this. We have the input output method, which is very much a version of process costing, where we know a certain amount of input goes into a process, and we expect in an ideal efficient world that everything that goes in, think of this as debit, coming in is everything that comes out, if you like, going into the next process. So whatever comes out of this process is what goes into the next process. But the truth is that we always expect a certain amount of loss. So the question here is that if 100 kilograms goes in and 90 kilograms comes out, then we have 10 kilograms of loss. The question here is, this 10 kilograms in process costing, the idea is that some of it can be sold as scrap, if you like, or as, if you like, at a sort of cheap, quite nothing substantial. So think of it as maybe it can be used for something else ultimately. So we can sort of measure that. If we can trap this is what this output, this measure is saying, that if we can trap this, we can actually find out what this, we can control it, we can cost it, so to speak. We can think of how can we get 95 kilograms out as opposed to just 90 if we have a way of doing this. So ultimately it's like sort of saying, we know what went in, let's measure what went in, let's measure what went out, and then we know that the difference is what we've lost. And then we have the other method, which kind of, we'll see, which sort of breaks it down. It looks at it via processes. It says that let's look at every single process and let's look at all the costs that are going in. So typically you have material costs, which is the actual material itself. There will always be heat and energy and things like this are referred to as system costs. And then finally, we have what we refer to as disposal costs. So at every process, probably at the first time, you'll only have material and systems, which is material and heat and energy. But then as you come out of process one, you would have some disposals. So you'll have to get rid of that. And then you'll have more material and more systems, if you see what I mean. So those are your two key measures that you need to know: input, output, and what's referred to as your material flow method, which has this idea of looking at things in terms of material, systems, and disposals. So let's fly through this. Again, I mean, I'm gonna do it within 10 minutes because there are no numbers, and I want to talk about the environment, which is important. But the key point is more and more people are understanding the economic dividend of really being aware of what they're actually doing, if you like, to remain corporately, socially responsible, if you like. And even for an organization that is not sustainable with its resources will in itself not become sustainable, if you like, is not sustainable as an organization. So sustainability in the long run is necessary for the sustainability of the organization. So again, like I say, there are a number of things. There are ethical issues here. Now there are legal issues here. There are regulatory issues in terms of environmental management. Some of them seem very obvious. If you're going to be releasing some dangerous substances via your manufacturing hubs into the environment, if you like, into the streams, then we need to be talking about cleanup. If you're going to be digging mines, we need to be talking about cleanups, that sort of thing, and that's what we're really trying to see. And because again, the stakeholders involved are, yes, fundamentally, primarily your money kind of holders, your shareholders, but we have an increasing range of ethical, just the society as a whole want to become, are shareholders and stakeholders in your organization. So you don't want to upset them. Customers themselves now are really looking, if you like, at the way you deal with products, how you make your products, what your attitude is, if you like, towards the environment. Really, we're really looking at not just environment. Sometimes even just what your social objectives are, what you're actually doing in that in that community. So again, like I highlight this thing about a good public image, if you like, when we're trying to manage the risk and potential impact of environmental disasters, if you like. As you can imagine, I mean, global warming, earthquakes, flooding, all this in the long run. Although some might argue maybe they can't see the scientific, but we have enough scientific evidence to link a lot of these things. But again, like I say, as an organization, we'll come to that internal cost. We have certain internal costs that we can reduce, if you like, if we can control those resources. So water and fuel, if we can manage them, if we can look for, if you like, alternative, efficient resources of energy, as opposed to using fuel, then we're saving costs in the actual production of making our product, and of course we improve our margins. So there are reasons. We'll look at them internal and external in a second. But it's recognizing this question of sustainable development to also meet the future generations. There's a lot of talk now about intergenerational accounting, where people are thinking about, if you like, ensuring that whatever they're doing, they're not using up so much of the resource so that there's none left for users of the future. Right, so let's carry on. So again, like I say, the aim is to identify and estimate. The aim is to put processes in place to be able to estimate the cost of environment-related activities, identify and separately monitor the usage and cost of resources like water, electricity, trying to reduce these. Ensuring environmental considerations are performed as part of capital investment decisions, assessing risk. I sort of highlight all of this. And you have lots of standards. You have ISO, you name them, from ISO 4000 to a range of standards that many organizations have to abide by, if you like, and you have internal auditors, if you like, related to these. So in a way, you go along and you bring in an auditor to show that you're abiding by certain, if you like, environmental standards. And many, legally, you are obliged to attain many of these standards anyway, to show that you're following or doing your best to carry out best environmental practice, if you like. Right. Again, you can see there's some issues here. Generally, like I highlight this already. Companies with poor environmental performance may face increased cost of capital because investors and lenders demand a higher risk premium. Energy taxes, environmental taxes, landfill taxes, you know, pressure groups can damage your reputation. And the fact is that over time, people will there will be a fall in demand for your product if you continue to use these sort of resources without respect for the environment. People start moving on to other products. I mean, this is a general term idea here. This idea of 5 to 10% of the organizational revenue in terms of the cost of processing input. And we see examples here with CFCs and aerosols, if you like, being phased out. And I highlight, again, like I mean, this is just kind of almost common sense. The fact is we have improved revenue, new products. Yes, all businesses will be expected to meet a minimum standard when it comes to environmental issues, cost reduction, use of resources. So these are the sorts of things you want to be able to write about and be happy with. But they're all bordering around the same idea, that there are costs, if you like, to ignoring the environment. The cost of cleanup and fines following environmental disaster, split into two categories. I briefly highlight them: the internal, external. Internal costs are costs that are directly related. Sorry, I'm going to go over the 10 minutes, but I will finish this in 10 minutes. Sorry, in the time in this one video. These are costs that are directly related to the income statement. Internal costs I talked about. You might have to get, if you like, permits, water disposal costs, improved systems, taxes, the permits, back-end costs like decommissioning once you finish the project. And then we have external costs that everyone has to suffer. So pollution, carbon emission, the pollution of our rivers, social welfare costs, people being ill, forest degradation. So you have that kind of scenario. Then we have classifications of these. I think that please read up on this in your textbook in terms of classifications. I mean, I can't see how anyone would want to ask you about those classifications. Read up on them, and please. The UN has its own classifications. There's one by Hendon and Mendoza. I always forget the Hansen. That's it, Hansen and Mendoza. They have some classifications. Please read up on those. But it's all just long theory. But key point here is what I've talked about, the input-outflow method. Recording material inflows and balancing it with the outflows. So looking to see where, what are we doing with that loss? You can see here 100 has gone in, 80 has come out, and the difference must be accounted for in some way. It may be that 10% of it has been sold as scrap and 90% of it is waste. So that's one way. And this one here, the material flow costs accounting. It doesn't just use material flows. It looks at the organizational structure, what is going on. I have a chart here to guide us. So I'm giving you some examples of system costs. So energy, production, storage. These are general production system costs in general. But what I'm saying is that ultimately you have at every process, you have materials, energy and system costs going in. You can see here we had no disposal costs here, and then once we got here you had losses, and then you had some disposal costs. So if you're able to measure things as you're going along, you have a better chance of controlling them, right? That's what we're trying to ultimately do here. So flow, this is material flow cost accounting, where we're measuring all those three areas. This is another one. Another activity is referred to as activity-based costing. And activity-based costing is it's everything we've said. If we can better find the drivers of these costs, well, that's one way, and that's a good way of doing it. But you can see the difficulty there. And then finally, life cycle costing, which we'll come to look at in the next video, sort of looks at the cost over the life, if you like, of the asset. So it looks at the full environmental costs from the beginning of the cycle right to the end, and then tries to split that cost over the number of units that you're going to make potentially over the product's life cycle, right? And that's kind of the sort of general idea with life cycle costing. I mean, again, there are advantages. You will attract new clients. You will have you can reduce your costs. You might be able to put a premium. It is ethical. Again, like I say, you will probably draw in more investors, environmental cost control, strategic. It is time consuming, and these things can be expensive to implement. But it's a big issue now. I mean, everyone's talking about, in the news every day, you will always see something about saving the environment. I mean, I saw something the other day on Dragon's Den about cling film and the use of this new paper to replace cling film. We were talking the other day about Sainsbury's, talking about people coming in with refillable plastics for milk. Sainsbury's are talking about halving their plastic use by half. You talk about beach clean events. If you like, there's so much in global demand. There's an article a couple of days ago in India. Global demand for cars was falling because people were moving to electric cars, if you like. So there's a lot going on, and companies are thinking or have to think about their impact on the environment. Okay, great stuff. That's on the environmental management accounting. See you at Lifecycle Costing.